All right. Welcome, everyone, to the first of our Trailblazer webinar series. My name is Cheryl O'Connor, CEO and co founder of Income Conductor. And it's my pleasure to introduce my co host, Mark Butler, who is a consultant to wealth management and wealth tech firms and CEO and founder of Wealth Management GPT. Welcome, Mark.
Cheryl, thank you for having me and welcome, Brett. Good to see you again, and welcome to all of our guests. This is a great series, and look forward to the kickoff here today.
Yeah, we're very excited. A day of firsts for Income Conductor. We also launched a brand new product today, our Income Conductor Pro. So we're very excited about that. But just so everybody knows, what the goals of this series are. It's going to be a little bit different than other series you might subscribe to. In my 25 years of industry experience, I've seen a lot of changes in technology and business that are supposed to make things faster, better, and more profitable, which has a lot of value. But it's really just improving the status quo. And I guess you could use the phrase putting new lipstick on the same old pig. And what really fascinates me are the people who step back, assess the landscape, identify the needs, and then develop whole new approaches to solving problems, ones that deliver real a new value proposition to both individuals and firms. And those to me are the true trailblazers, the ones that break the mold. And speaking of breaking molds, I'd like to introduce our first trailblazer guest, Brett Ramsey. Brett is one of the owners and LPL financial advisors at Artisan Wealth Strategies based in Carmel, Indiana, and has been in the financial services industry for over 20 years. He specializes in retirement income planning, which is how we met, as well as comprehensive financial planning, and holds a CFP certification. While working as an executive at an insurance company, Brett began to realize how much he really enjoyed working directly with his clients and wanted to be able to provide comprehensive support and guidance to help them reach their goals. What I love, he says he loves ensuring his clients money lasts one day longer than they do, which I guess is everybody's goal, right? So thank you for being our first guest on Trailblazers, Brett. How you doing?
I'm doing great. Thank you so much for having me. I enjoy these opportunities to share and learn from others.
Great, great. So one of the things that, in our conversations that really impressed me about what you were doing with your business was looking at how you could expand your reach and help more people. And maybe you could start us off by talking a little bit about that.
Well, I think the first time I really started thinking about expanding my reach and who I could help, I was a little frustrated, I think, because I kept running into a situation where, looking at different marketing programs and things like that, everybody I felt were kind of fighting for the same client. And it was, we used to talk about the perfect client, and I would go to different training programs and purchase different marketing programs and different things like that, trying to grow my business. And we were all kind of fighting, like I said, for the same thing. And I stumbled actually into a marketing niche. I was recruited by a headhunter originally, and then met a firm. And what I liked about them and what they were different was that they were helping people retire. So they weren't already retired, and they worked with the employees of a company around the country. And I ended up taking on the franchise here. And it really helped me because I liked that we were meeting them before they retired. And I just remember that really resonated with me. I mean, I started my career in industry. I actually have a degree in mechanical and aerospace engineering, and my first job was actually working for an industrial company. And I remember how impactful it was for me. My very first day on the job, I joke, is I had my dad growing up and everybody else didn't. And so my dad was an executive vice president of a big company. and he made me read all my benefits lecture or all my benefits material. And so I knew how to enroll my benefits. And so a lot of my people that were starting at the same time were very well educated people, and they didn't know how to enroll in their 401k. They didn't know how to pick their health insurance. And I progressed through my career pretty quickly. And I had to give someone a 30-year service award when I was 28 years old, and I was now their boss. And I worked for GE in the 90s. That was pretty hard to screw that up. I mean, so everybody was making a lot of money back in the Neutron Jack Welch days. And I was like, oh, you must be excited about potentially retiring. And this employee got very quiet, and he didn't want to talk about it. And he wanted to talk about everything. So I knew something was up. So I pulled him aside and he goes, I never enrolled in that. And I was like, what are you talking about? And I made it my mission at that point in time to make sure all of the employees that I was responsible for took advantage of their benefits. And after a year, he came running in with his 401k statement. In 1 year, he'd saved more money than he had ever saved the rest of his life.
Yeah.
And so when I had an opportunity to start really trying to work with people, it impacted me in a different way maybe than some others because of those experiences I had early in my career. And like I said, I want everybody to have the benefit of having my dad as their financial coach, because he started with nothing in rural Arkansas and retired as executive vice president of a Fortune 250 company. So had a pretty good person to learn from.
Wow. That's a great story, Brett. I know in some of our conversations, you've talked a little bit about your sort of reshifting or recalibrating around a new market segment and how you want to deliver advice to that market segment. Maybe you could talk just a little bit about the unmet market needs and what drew you to that particular segment.
Well, a little bit of it is that story I just shared, and that gentleman's name was Jess. And so what I talk about is I want to make sure that I help as many Jesses as I can, right? Because they're the real people that need help. And what I found is that, like I said, in our industry, we're so busy trying to fight over the people that already have money, because most of our revenue models are all built around some type of a revenue factor based on the size of the account and the amount of money that they have. But I said, well, geez, how do I take the best clients that I really have, and what did they look like before they became my best clients? And we really started kind of trying to define the when we could meet them, because we found that it was, I hate to say it this way, it was easier to meet them before they became great clients. We really kind of wanted to make them great clients by finding them earlier, and then, like I said, sharing this wisdom or this knowledge that we've gained with them to help them get there. Because we found that if we do that, that those clients, one, are very sticky, like they really love us, right? Because they've seen us love them when they weren't a great client. And then they're like, okay, so they're very loyal. They give great referrals. They do the things we ask them to do. So we just started trying to map that out, and we found consistent patterns in identifying those people. In our opinion, at least 3 to 5 years before they're going to retire was very important, because most of them our great clients ended up retiring before they originally planned to, because of an inheritance, because of a corporate downsizing event, because of a medical or a health event, things that they couldn't really predict. So a lot of our clients don't retire on that perfect day. They retire when something happens. And so we need to have that relationship with them before that thing happens, so that we can counsel them through those difficult decisions. And that's really why we started focusing on this market segment, and why we designed the service model that we did, to try to show them that we care about not just the money that they have invested with us, but all the other aspects of their life, so that we can help them have a confident retirement. Like I said, the tagline at Artisan is handcrafted for a reason. And it's handcrafted for a confident retirement. So in order to do that, we got to know all the stuff we're working with to create your handcrafted plan. And that's how we started building this thing.
So, Brett, most of the advisors I know, are dedicated to helping people. They really want to make people's lives better. But, they're restricted by the fact that they have to make a living too. They have to secure a revenue stream. And so they're kind of trapped in this AUM. I can only take clients with so much assets under management, and they'll meet with clients, and, the clients will love what their services are, but it's kind of, come back to me when you have assets available to manage and I can help you.
Right.
So how do you overcome that?
Well, one, we are a for-profit business. I do some pro bono work because as a CFP, we do have to give back to the community. It's one of the requirements of being a certified financial planner, and I believe in that very strongly. But what we came up with was understanding, okay, per relationship, what revenue level do we really need to have to justify having that relationship and pouring into them the type of attention that they need? And that'll change, I think, based on where you live and what your economics are around, what your staff costs, your rent, your various things that you have to pay for. But we came up with that number, and we said, okay, so if a client is delivering that level of revenue to us, we should be able to provide great service to them. And that's how we developed some of our pricing models. To be very clear, is that I said, hey, why do I need to wait for you to retire or for your money to move out of the qualified plan or for you to inherit it for us to build a great relationship? If you want the things that we do and we like you and you like us, we call that kind of the dating part of the process, is while we're dating, right? How can we kind of move from dating to kind of getting married? All right. And so that's where we came up with the subscription model, because quite frankly, it lowers the barrier to entry for someone. So instead of them having to transfer whatever your account minimum is, which means they've got to move the money, right? They got to have the money to move and they got to move it, right? And then you've got to take over. Well, what if they could just sign an agreement and start paying me a couple $100 a month? That was a heck of a lot easier, right? And so we reduced that barrier to entry, but we didn't eliminate it, right? You still got to do something. You got to sign the agreement. You got to start paying us a couple $100 a month, and then we can be friends and we can start really dating, right? And then you can find out if you like the advice that I give you. That are we going to work well together over time? And what we're finding is that subscription model shift for us allowed us to not have to just wait. We used to have a system, like I said earlier in my career, where we actually had what we called a club, where we were waiting for people to retire from a certain company, and we created a free club that they could join, which was their way of kind of telling us, hey, when I do retire, I'm going to retire with you. So then we could start building that relationship. And I said, well, that's kind of good, but not enough, right? Because now we're not doing some of these other things. And so that's the kind of the marriage, right? I had a friend that was really good at clubs. He used to be in the business of country clubs, so he helped me with that idea. And then I was actually talking to a younger person who was talking about music, and they were talking about their Spotify subscription and how it customized to them, and they could like things and they could really interact with it. And that was kind of, to me, that was my Reese's moment. That was where chocolate and peanut butter met each other and created this great tasting combination, right? Of like a club, something you could join, you could be a part of it, you could contribute to it. And this subscription is how we pay for it. And I found that seems to really resonate with most of the people that are choosing to do business with us today. Because it's like joining your health club or something else. I'm going to get something back, but I don't know what interval. And I just could never do like what I call financial planning for a fee, where I gave people a report. It just didn't work for me. I tried it. To be blunt, I sucked at it. And so I never really got any good at it. I'm sure there are others that are really good at it, but it just didn't work for me. Subscription model really works for me.
So for our listeners and our guests here today, tell us a little bit about how what is that offering? What are the different levels of that offering? How do you charge for it? How much do you charge for it? As you know, a lot of advisors have moved in this direction, or want to move in this direction for any number of reasons. So I think it'd be
Yeah.
great to hear your perspective, because I'm sure there's some things you've learned along the way.
There are, and I think also the key thing there is we are still learning, right? So
Mhm.
I'm still out there constantly talking to other advisors and experts, and why I believe so strongly in participating in things like this is that I'm sure that someone's listening today is going to ask a question of something I didn't think about that I need to think about. And it's usually about, to me, the price so much that we charge and the tiers and the levels. Originally, I thought, oh, good, better, best. That's what I learned when I was at GE. We have, and you want everybody to kind of get in the middle eventually was kind of the whole idea. And I studied with another advisor who had like a 3-tiered thing, and they were, this 100, 300, 600, and the particular people that they were targeting. And I said, whoa, that sounds really good. And I tried to work on that, and I wasn't working for me. And then, because like the people that we serve, like we kind of know what they need now. We know that they need a retirement income plan. We know that they need tax planning. We know that they need to get their estate documents in order. I call those our big three, right? There's some other stuff that they need to do as we put into our service calendar. We map that out over the course of the whole year. But really what I couldn't figure out is who needs just the retirement income? Who needs just the retirement income plus tax? Who needs just the retirement income plus tax plus this thing? And I was like, nah, screw that. Let's just throw it all in there. So we started out with a bunch of different tiers, and it came down to one, right? And we priced that. And I'm very clear here. We are in the Midwest, right? Our price might not be what you need to price things in your market, but we charge $200 a month for that. And I can get yeses to that, right? And so that's what I focused on, as stupid as it sounds. I kept trying different prices and different scenarios until I consistently was getting yes. Right. I said, that's good. Let's do that for a while.
Yeah.
Then, like I'm a simple minded man. I really am like a caveman. I don't really think very hard about stuff. I'm like looking for yeses. And then the other thing we kept stumbling into, though, was that all my clients, I've done a lot of speaking engagements and a lot of teaching things. And so people are like, a lot of our clients had attended one of my classes or referred to something out of a class. And they're like, oh, my kids or my grandkids need to learn that thing on budgeting that you were teaching, or they need to learn this. So we did create a friends and family plan that's a $50 a month plan that's really designed for like people that are younger, that are just starting out. And we see that as those are our future clients, right? And what I want to do is get the people that are going to inherit the money from grandma and grandpa or mom and dad. We want them in the club now. And we want them to feel like they're a client, that they're not just some afterthought, that you're taking on my small Roth account or you're taking on some tiny account as an accommodation for my quote unquote wealthy mom or dad or wealthy grandma or grandpa. We tell them straight out, like, we're not talking to grandma and grandpa or mom and dad about your stuff. You're our client. We're a fiduciary to you. What do you need? And that has really shifted things. We are starting to get a lot of 20 somethings that are joining that at $50 a month. And that may seem trivial, but man, it's way better than getting paid nothing for those relationships. And now I'm pouring into them, and our staff is scheduling calls and meetings. Those calls aren't long. They're awesome calls, though. When you help somebody like that, needs the help. And now also they're probably going to inherit $500,000 or $1 million or whatever the number is down the road. Who are they going to go to? They're coming here, right? Because we already have them as a client. So it's a little bit of self-preservation as we looked at our client base that were aging. If we were concerned about not retaining the assets, we said, we better fix that. And so that's when we came up with that level.
In Brett, the client base that you're serving today, is it, from a geography standpoint, is it a nationwide client base, or is it more Midwest based? Tell us a little bit about that.
Well, originally, I would say the origin of most of the clients was here in the central Indiana area. But that's not really the case anymore, as a lot of our clients have moved and they're spreading out. So our registration is spreading out. And one of the things we are working on is our ability to be here in this environment and have meetings and meaningful relationships. So just the other day, I was counseling the children of one of my clients who lives in Colorado. They were getting ready to get married. That was weird. I was like almost doing premarital counseling, but it was about finances, and it was a great conversation. And they're going to be a client. They're going to join the $50 a month subscription. Awesome. Yeah. Right. And we love that, right? And so that's happening kind of organically. It's not necessarily a strategic plan of ours, but it certainly is occurring. And technology, not only the technology we use to deliver advice, but our technology to communicate has been shifting and changing as well.
That is so needed out there.
Hence why I got this cool microphone.
Yeah, that is a good microphone.
So what happens when, they start to get closer to retirement and, there it's the assets are on the horizon. So have you experienced any clients that say, yeah, I want to stay with this subscription level and I want to be able to get all the value out of you, but I'm going to leave my assets somewhere else?
We've got two like that right now, to be very honest. But two sounds like a large number, a small number. But I hate saying it this way, is I don't care because I price the service where I'm not losing money on those relationships, right? And we're working actually on some incentives for those clients to want to move their assets over to us, and we'll talk a little bit about that. That's part of how the income conductor fits in, right? Is that I can give you advice to hear, but now I really need to orchestrate and execute, right? And that is, do you want to do that? And to be honest, both those clients are already scratching their head going, no, I don't want to do that, right? So as they actually retire and the assets are no longer need to stay on the platforms at their employers and things like that, based on their ages and everything, they're almost intuitively going, you've built the plan, execute the plan, right? And we're working on some of the pricing incentives to make sure that that makes sense for both parties, right? So we're sensitive to the pricing, but at the same time, we realize that one of those clients is going to be $2.5 to $3 million client, and so if we're making that AUM fee, then yes, we're going to discount the subscription to them because we're trying to hit that target revenue relationship. We've kind of mapped out where our sweet spot is. Very clear is $750,000 to $1.5 million is our sweetest spot. It can go up to 3 million. We really don't play much in the above 3 million range. Not saying that you can't, but that doesn't really suit us very well. But I think that also is geographically based, right? I think if we were in higher revenue areas where mortgages, rents, all the other things are higher, then those numbers would naturally change. It's just, we have a super competitive cost of living here where we're at.
Sure.
So, all of this requires time and effort. And I would imagine you really depend on technology to provide efficiencies of scale. So, what does your tech stack look like? What do you look for? How does that technology fit your business model?
Well, one of the technology decisions you've got to make is, who's your clearing firm when you're independent financial advisor. So that's part of the reason why we're partnered with LPL, is I feel that they do a pretty strong job of bringing technology to the table, and I like to give them credit for that. Are they perfect? Nope, nobody is. Right? Everybody's got some flaws, but they seem to be doing okay at that. If we include compliance, trading, all that kind of stuff. And they try to integrate well. Do they? No, nobody really does. I think that's a little bit of the problem. I think for me, if I drew a picture on a whiteboard, the CRM sits at the center. All of these other things have to get fed from the data that we gather from the client, right? So my relationship with the client gathers data. Where does it go? It needs to go into some form of a database, this customer relationship tool of some sort. So we use Redtail for that. I feel it's very economical, and for the most part, it does a pretty good job of talking to the other stuff. Then what I've also found is there doesn't seem to be any real panacea, no perfect secret sauce product out there that does everything really great. Everybody seems to do something really well. And if that's a part of the value proposition that we feel our client is really ultimately paying us for, then we're going to partner with who's good at that. Right.
Mhm.
So, whether that's their, comprehensive web-based, financial planning software, I feel that almost all those are reasonably good, but also reasonably flawed. There's parts of the story that they do great. There's parts of the story they don't do great. Right. So I would like turn off the retirement income part of all of those. Right. Because I think that, and we can have some philosophical debates around retirement income planning and why I believe strongly in the income conductor process for asset management, as well as communicating the story to clients, is that I believe time-based retirement income planning mathematically is the most accurate. And I have studied it. I basically have a master's in that. So I feel that that statement is one that I'm very confident in. Doesn't mean other things can't work for people, but, you know, almost everybody else is built around a different theory, and I don't think that math's very good. So I would like to turn that off because I think it confuses clients. So what we found though is our client that we do well with, I don't want to call them not tech savvy. That's not right. But what they're not is they're not tech initiators, might be a better phrase. I don't even know the right word to say it. Is they like to see the stuff that I do, but they're not doing it on their own. They're not the people that are running around the internet looking at everybody's calculator trying to calculate their own stuff. So when we made this decision to move in this direction, we know that our client is not a do-it-yourselfer. In fact, the closer our client is to a do-it-yourselfer, the closer they are to not being our client. We have fired some of those clients. They are a pain in our butt. We don't like them.
Probably
Constant.
advisors on the call can relate to that, and they think of some clients of their own that fit that profile.
And once again, there are people out there that maybe can serve that market, but we've decided that's not us, right? Our clients aren't trading their own stuff. Our clients they're not executing the ideas that we give them. They're not going out there. Once they trust us, they do the things that we ask and tell them to do. Those are our people, right? And so those are the relationships that we're trying to cultivate. So what we have found is that the technology needs to be good for us. It doesn't necessarily need to be super easy for the client to use, right? So we built our calendar and what we communicate the client. Why we do what we do is we do it kind of in a batch process at times so that we can get really good at things. And we don't try to do a bunch of other stuff, right? Like I mean, I try to tell some people is like, I'm not trying to do like small business owners. I don't have any of them, right? If you're one of those people, awesome, high five, good luck, right? They annoy me, right? And I'm like, and I'm not good at helping them because they question everything, and they're like, well, I could just do this instead. I'm like, well, then why did you ask me? Like, if you asked me, it's because you wanted my advice. So as weird as it sounds, is we like doing business with people that like doing business with us.
Yeah.
So we just try to find more of those people, and we have plenty of them.
You guys have done a great job with your defining what your ideal client profile looks like and really staying true to that. Hey, Brett, we have a couple questions. And if anyone has questions, the Q&A box at the bottom of the Zoom window, you can pop in questions on there. So the first one is from Alex, and Alex is asking, is the monthly subscription considered a deductible advisory fee?
I'm going to hedge my bet here just a little bit, but the answer to that question should be yes.
Yeah, I thought you'd say yes.
It should be like paying a tax fee or anything else. Because historically, we have tax prep as a component of our business. I always try to tell people is that's one of those not me jobs in our practice. So I don't have Mark here with me. I would probably turn to Mark and go, Mark, what's the right answer to that? But that's another part of this that I think is important is that our technology and everything, we've designed it to be as a team, right?
Sure.
Is that I try not to act as if I am the fount of all information, right? I'm more of that coach that tries to get the right player in the game for you when that's the player you need, right? So my job is to identify the need, the circumstance, the situation, and then find the right resources to get the right answer for you when I don't know it.
Yeah.
And that's one of the ones that I kind of know, but I'm not like 100% certain on.
Okay. The second question from John. John's question is, do you manage your own money or do you use the managers on the LPL or other platforms?
So the answer to both those is yes. Okay, so it's kind of the same thing. Like there's certain areas where we have an expertise that we are better at it, and then there's other things where we're not. And so once again, we try to tell our clients very distinctly where our strengths lie and where they don't. So we use a combination of an outsourced chief investment officer approach, where we actually utilize another firm to do due diligence and help us with that. And then there's also some handful of clients where we have some specific tax planning oriented account issues where we do use a tax strategy where we use a third party asset manager to manage that tax strategy for us. But once again, that's the whole thing of being that coach is that that's what that client needs, right? We got to blend it all together. And as we grow, we do think that some of that may start to insource where we could hire someone to do that. But today, that's how we handle it.
Great question here from Mike. Mike asks, how many clients do you serve on a subscription basis versus on an AUM basis? And second part to that, are you charging a separate planning fee from AUM fees?
Yeah, I'll answer that two ways. So I have a partner. So we have two advisors in our practice, and the partner is near retirement, and so we're actually in the process of merging um, the models together, and so we're actually creating a hybrid, right? So we have clients that he's had for 15 years that were used to paying a certain way, and now we're bringing in new services to them, and they're like, oh wow, I want that. I want that phone call I got to make. It handles my tax, handles my estate, where I go. They like this simplification, especially it seems to be as they age. So what we're doing is creating a hybrid where depending on the size of the account, we have created revenue thresholds. And so we'll give a discount on the subscription fee the larger your assets are. So I keep it super simple. $500,000 and below, they get a 25% discount. If they're $500,000 to $1 million, it's 50%. From million to 2 million, it's 75. And if you're over 2 million, you get you get the full meal deal. It's all included.
Awesome.
And I think one of the things you mentioned there, and it's key, and I see this as sort of where advisory businesses should be heading away from just concentrating on asset management or portfolio management, is offering at least, and you have a rule of three, Brett, which comes from your GE past, but
They trained us hard at GE.
offering these complementary services that really end up making you the hub of the client's financial world.
Yeah, I've lost some clients. Like I said, I try not to act like we're perfect because we're not. We have some things, and I always like to evaluate why did we lose a client. And the one that impacted me the most was a client that I had grown quite close to, and he was having a health event, and in the health event, he started dealing with his insurance provider, and he actually called me almost in tears when he fired me.
Fair.
Because he knew that we had done what we said we would do. We had helped him figure out some very significantly difficult things for him financially, but he wanted to consolidate the relationship because he was tired, he was battling cancer, and he just didn't have the energy to manage it. And I just took that as profound, to be honest, of like, man, that makes sense. Like I almost wanted to go hug him, right? Like, dude, I get it, man. Like you're struggling. You don't need this complexity. Great. I hated losing him. It was one of our highest revenue clients. But what that taught me was that I need to be caring about them in such a way that they know that I'm who they go to if they need help, right? They don't call others, right? And so I also use a phrase as I don't need some other little birdie whispering in their ear, sweet nothings, right? I need to know what they care about. I need to be trying to do everything I can to add value. And so that's when we started adding those services and changing our thought process around it. And the way I say it to clients now is that by signing this subscription agreement, we're now on the hook for delivering these things to you. We have an agreement in place that says we'll add this value and do these things over the course of this year. Where when I had an AUM model only, other than managing your assets and doing the required stuff, I really didn't have anything that forced me to do anything else for you. And so what I found was that our customer service, to be honest, started to suck because we weren't really engaging people other than the required things we had to do based on the advisory agreement that we'd signed with them. And so these great relationships to where we used to do all this interaction and planning, and they used to be around all the time, got to be like this reluctant once a year kind of like phone call kind of thing. And the relationship was dying. And I was like, this is terrible. Like I need to fix this. This is on me, right? And boy, it's just been so dynamic since we've shifted this thought process. We're interacting with our clients so much more often. They're shorter interactions, not super long, drawn out ones, having much more fruitful conversations.
That's awesome. We got a couple of follow-up questions. I know we're a little bit over time, but it looks like people are staying with us. This is a follow-up from Alex, and this might be too much to go through on this call, but he says, can you share a list of what services are included at both the levels that you offer?
I can't rattle them all off, but what we do have is kind of I call it like a Denny's menu kind of thing where we have it all checked off, and that's something that I don't know. I would have to double check with compliance and obviously Cheryl and everything. But if you come to our website and ping me, I can email it to you.
Awesome. Great offer.
So artisanwealthstrategies.com. Come find me in the World Wide Web, and I'll do my best to get it over to you, because we do have a sheet that covers what we go through. And to be blunt, I just stole that from another advisor and customized it to our needs. So that's all. I'm real good at that.
For you.
And there's a follow-up from Mike as well. He's asking, is the subscription level and services provided for the coming year renewed annually at the same pricing? And then second, how do you handle subscription renewals?
That's a great question, Mike. So right now we are using the advice pay system for those people outside where we don't have assets that we manage to handle that. And so the maximum that the advice pay system will allow is for the subscription to be 3 years. So that's what we have everybody on right now, is it's monthly through 3 years. So there's no like impending renewal problem currently. We do anticipate down the road having, inflationary pricing adjustments, but for right now, we've really tried to pick a price point that allows us to staff correctly. I mean, that's my biggest concern, quite frankly, is that we would not have the right staffing, because our practice manages close to $200 million. This is something that we're growing into, like I said, with my partner that's getting ready to retire. So my biggest fear was rolling this out and getting a lot of yeses and not being able to deliver. So we've been kind of slow. Like, we've been using this for new client acquisition for over a year and a half now. And that's been going very well. And we're slowly starting to rolling it out to existing clients to make sure that we have the right software, the right pricing, the right people, and we're there. And so I would expect in the next year, quite frankly, if everything goes the way I expect it will, we'll probably add 400 to 500 tax clients in a year, because everybody we talk to goes, "Oh yeah, please do that for me." And so, so we wanted to make sure we had the pricing right, because we anticipate we're going to have to add some staff to do some of this work.
Oh, that's great. I wasn't aware that your partner was retiring. So are you
That's a fairly new thing.
wow. So are you planning to bring on another advisor, Brett? I mean, you must have thoughts of someday retiring yourself, put a succession plan in place.
Well, I am not afraid to say my age. I am 51 years old, and the answer is yes. I do have a plan someday to retire, but right now, I think the median age for an advisor in the United States is 65. So I still think I'm really a young
Very
guy
young.
and a trailblazer, and that's how I feel. So I'm not designing that yet. But yes, the answer is that we're growing. We think that more, like my partner who's in his early 60s, we think more and more people. This is, I hate using the word they're struggling with. This shift in how we deliver value to the customer, how we price it, is something that I see a lot of advisors really wrestling with. And so they're trying to figure it out. I'm in a lot of these conversations with other advisors that are trying to figure out their own succession. In the same way I would plan retirement for one of my customers, one of my clients, I'm trying to help them plan theirs. And what we have to do with that is figure out their timing, their cash flow needs, et cetera. But I think it's much easier to partner with someone like myself who can come in and add these new values and help you scale to that, and then bring the right team and staff, along for the ride, right? To help you do it, where your staff may not be ready to add tax or estate planning and things like that. I mean, watching, my partner do an estate plan for the first time the other day over the phone with one of his clients was awesome, because it was done with it. And he goes, "This is exactly what they've been needing." And I was like, "I know." Right. Because I'm sure, like that's why we built it, and he was just like, "This is amazing," but it's like, and he made a statement that I think a lot of advisors would make, which is like, "I know that they need it, but I don't know how to do it because I've been doing things this way for so long and this works and I'm profitable or whatever that I'm afraid. Right. And he said that. And I said, well, what are you afraid of? Like helping them more? And he goes, yeah, but what if we can't do it? And I'm like, well, then they're right where they were. And so, like, I think one of the things that being an athlete helped me learn was in order to get better, you had to fail,
Agree.
right? You just magically get up and be able to hit a jumper. You had to go work at it. I didn't magically complete pass. I had to go I had to throw the ball hundreds of times to get to where we got good at it, right? So over the last decade, I've been throwing this ball, so to speak, hundreds of times trying to figure this out. And now I'm hitting it. Right now, the people are catching it, right? Because they're like ready for it. And so, but the issue is if you're struggling with how to transition your practice, I can see where that's daunting because not everybody's comfortable with failure. And
Well, I think the key is, first of all, you're client centric. You care about helping people. And secondly, you're open to change and you're willing to try new things. And, you're the perfect trailblazer, Brett, to kick off our series. So I really hope that the folks who were on the webinar today benefited from all of your wisdom and your scratches and bruises. And we really appreciate your sharing your wisdom with us today.
well, thanks for having me. And I guess that's the benefit of being a decathlete. I was good at a lot of things, but not great at anything. So I'm used to trying new stuff.
All right. And thank you, Mark, for co-hosting. And thank you, everybody, for attending. And watch out for our next Trailblazer webinar.
Thanks, everyone.
Bye-bye.
Bye bye.